protected. Evening. Pardon me for the delay. If you guys can confirm for me if you can see my screen and if you can hear me. If you can just confirm for me if you can see my screen and also that you can hear me, please. So we can go ahead and get started. If you guys can confirm for me if you can hear me and if you can see my screen. Should be seeing the Nasdaq, I think 5 minutes chart. Okay, anyways. Uh we go back to what we basically, and if we can recap quickly, if you watched yesterday's session, I explained to you guys that I'm more, I want to see a bit of bearish prices in the market. That's what I initially think. That's what I said yesterday. And I drew you guys attention to the candle probably acting as a bearish order block, which is this one. So took the 50% of that, we marked that, and here we go. In yesterday's session, this is your Nasdaq, right? This is your Nasdaq. So we typically, I wanted to see price basically reacting here, going to the downside. And yesterday we had a bullish close. I initially wanted to see yesterday being the high of the week, but it didn't happen that way. So as you can see, it's a Wednesday today. This red candle, which is action, this is a possible high of the week. Okay, this is a possible high of the week for us, and Yeah, if you want to see yesterday's analysis, basically you can watch yesterday's video and see exactly what I'm talking about in that sense. Now, when we go down to this morning, I wanted to see how price is going to react. Oh, so if I'm not mistaken, I wanted to see how price was going to react at this level. I wanted to see how price was going to react at this level. Again, I wanted to see it react at this level at specific times. Remember, yesterday it was around 11 past 11, I think half past 11 when price reached this level. So I was not interested in trading the markets anymore because we were outside of our kill zone, right? As a result, it went past basically just extended stop hunt. And if you go down then to the 1 hour chart, if you notice, we have another, which means testing the 4 hour and this 1 hour fair value gap, which is this one right here. So initially, when price went up further, it was also testing the 1 hour fair value gap, which is this one that I just marked just now. Essentially, this is what we were looking at yesterday. And then when today's session opened, it was consolidating at the top here, going down to the lower time frame, which is the 15 minutes. Now, what do we initially want to see? We want to see how price is going to react at specific times. See price react at specific times. Now, I did not trade today again because I did not really like how the market was just after the morning session. Okay, liquidity over here, buy side liquidity obviously was taken. This buy side liquidity was taken right here. PSL. We had buy side liquidity taken over here, right? We had buy side liquidity taken over here. Buy side liquidity taken. And then pay attention to this. Price broke down. What time was this? This was the morning session, right? Which is the London session. Price broke down and went back up, right? This is around 7:30. We are not trading at 7:30, right? We are only interested in participating in this market from what time? From 8:30, which is somewhere around here. I don't want this one. That's not there. So anywhere around here. This is 8. So this is the 8 o'clock candle, 8:15, 8:30. So we are interested in participating somewhere here, right? Which is this candle over here. Now, at this point, I was not in the, obviously I was in the market, but watching because I did not want to trade before my kill zone, right? So price broke down, shifted market structure over here at around 8:30, which was a market structure shift. Gave us this little fair value gap over here. Gave us this little fair value gap. Again, I was still not so keen in participating in this market. It went, tested the fair value gap, and then dropped to take out sell side liquidity at this over here, right? Now, when price was at this level over here, I wanted to see a nice setup possibly forming around from 10 to 11. Okay, I wanted to see a silver bullet setup forming somewhere, but that's when it technically didn't do anything because I think 9:30 was over here. After this 9:30 stop hunt over here, or maybe it was a market structure shift as well, stop hunt, and then it just basically drove to the downside. I had anticipated that maybe price is going to give us this stop hunt. And then my entry, I was looking at my entry coming back. This is now when I was ready to participate at these levels. I wanted to see price coming back now to these levels. Never mind the chart being a bit busy. I wanted to see price coming back and and reacting somewhere at these levels for a possible short at these lows, right? But as you can see, price decided to just go down, take out those lows. So this is when it was 935 over here. So I said, okay, if this is the case, then I want to see price coming back to this. If it comes back to this level, I want to go short over here and what? These lows at these levels right here. But price just basically decided to continue going down with no possible reaction, really. So I think, yeah, so that's the reason why I didn't really trade. I was anticipating that's going to happen from around 10 a.m., right? So from around here, I was like, okay, if price goes back in here for a silver bullet and drop for me, then I would want to participate. But from then on, you guys can generally see what price did. It basically just consolidated and did nothing for the remainder of the day. Okay. Also, if you guys can check the heat map, remember, we want to trade one-sided markets. Okay. We want to trade mostly one-sided markets, meaning we want to trade if the market is giving us a clear direction to the downside or a clear direction to the upside, right? If you check the heat map today, if you check the heat map for today, right, price was not really showing a one-sided market. It was very robot-like, right? It was very like Nvidia being down 3%, Apple 1%. Nvidia is obviously the biggest driver in this since it's the biggest market. So initially I was bearish for the day, even though I'm not saying this is going to be the highest high, but I think that we've reached a point where the market is failing to make new higher highs, right? It's now basically failing to break market structure and really give us a bull run. Okay, that's what I initially think. Okay, so looking at the heat map as well, it's green, it's red, it's gray, it's just all over the place. So with this being like this is a confirmation for me that also the market is not such a high probability place to be in. Okay, so these are the little tools also that you need to apply in your trading to basically, I don't know. These are the little tools you should also apply in your trading to basically increase your probabilities. Now, the one thing that you also need to fight again is the need to trade every single day. If the market is not giving you a setup and it's not tipping its hand and coming to you, then you technically don't want to trade that market. Okay. You want to wait for the market to present itself. You want to wait for the market to show its hand and say, hey, this is where I'm going, and this is how, you know, how I'm going to get to my destination. If it doesn't do that, you initially don't want to participate, because now in a market like this, you do not want to participate, even if this is your kill zone. This is a proper kill zone. This is your proper silver bullet. Or the market is constantly consolidating like this on the higher time frame. Sorry, on the lower time frame, on the higher time frame as well. Because as I said to you guys yesterday, if you remember what I said to you guys, we are initially at a consolidation stage now in the market. I don't understand why the network is being slow. We are technically in a consolidating market. If you look at the higher time frame, yes, it's constantly pushing to the upside, but it's not giving us big pushes to the upside. It's just the market just giving us these little. If we're on a bull run, we want to see highs like this, how these highs are being taken on. But right now, it's just doing this in a small range on the higher time frame. And yes, you can find setups in here. However, it's nicer to trade when the market's basically giving you such scenarios. Now, if you also go down and check your dollar index, which is your DXY over here, go down to check your DXY. Yesterday, I think this is the possible high of the week, and I want to see DXY basically coming to take out these lows over here, these relative lows at this weekly fair value gap, and ultimately the lows down there. Okay. That's what I initially want to see. But the dollar index was really at a consolidation as well today. So if you check the dollar index and you really look at what was happening on the 13th, you look at the price action. The 13th starts from here, right? So from this orange line all the way to the right hand side here, orange line all the way to the right hand side. This is nothing but a sloppy consolidation. Okay, so I think this is another reason why the market was reacting the way it did. Okay, this is another reason why the market was reacting the way it was reacting. I'm not sure if you guys have any questions for me. It's it's really not, it's complicated, right? But it's not that complicated, because what I need you guys to do mostly is understand what the higher time frame is doing. So if you look at the higher time frame and get a feel of where you think price is going, we have a breakup block over here which basically bounced, and yeah, I think this is what can also help us push price low. But if you can go on the higher time frame and kind of see what the higher time frame is doing and get a feel of where you think price is going from the higher time perspective, going on the lower time frame would then be you confirming, right? Going on the lower time frame would then be you confirming what you think the market is going to do, where you think the market is going to go, and how you think the market is going to react at specific levels, right? Remember, as price is going down or as price is going up, if we're on an uptrend, we want to see bearish fair value gaps like this being disrespected, being turned into inversion fair value gaps, basically. Those are the little things that you will then need to understand just to know where you want to see the market reacting and where you don't want to see the market reacting, which fair value gap is good to use and which fair value gap is not good to use, which trading day is good and which trading day is not the best. Okay, so those are the little things that you basically want to check, right? If market going to give you certain fundamentals at specific days, for instance, yes, this week we have, today we had fundamentals, but the major fundamentals for the week, with which I think it's the reason why the market was not that active today, is simply because we are waiting for the stronger news drivers, which is happening tomorrow. And what do we have tomorrow? We have the PPI and the retail sales. Usually, these tend to give us more liquidity in the market. They tend to give us more volumes. They tend to give us more movements. Okay, so if you have things like this happening and things like this, you get to see and understand why the market is reacting a certain way at certain times. Okay, I think for me that's also quite an important thing to understand, right? Which days are going to be more or higher probability than the others? Which days are going to be higher probability than the others? And yeah, so basically this is how you see these things. It's just not that it may seem like a lot of information, but it's really not much. So you just try and implement these little things, and you just try and implement these little things and see what the overall market is trying to tell you. Okay, you you apply your yields. You check what your yields are doing. The yields, obviously, as I said to you guys before, they move in line with your dollar index. You see, again, another thing is that look at the yields. They're pushing up, right? The yields here, right? We had a bullish day. They obviously need to go against. They need to go against. They need to go the opposite direction. So this is fine. This is the 10-year yield. Look, it's going down. And these markets initially, in most cases, I think the other one is, in most cases, they need to be in line. So the US 10, the 30-year, the 10-year, and the 5-year, in most cases, they need to be in line with the dollar. So if you see all of them going their own way, the dollar is going this direction, which is bearish today. The 30 was bullish, if I'm not mistaken. 10-year was bearish. So you see, there's no alignment in the market, is essentially what I'm trying to say. So if there's no alignment like this, meaning they are not going in the same direction, this it means it's an indecisive market, which then tends to be a low probability environment to trade in. Okay. So these little things are the things that basically allow you to know or understand rather which is the best market to perform in or to participate in, and which is not the best market to participate in, or which market is more high probability, meaning if it's more inclined, because you want to trade when the market is more likely to go up or more likely to go down. Because if you are trading with this high resistance trading, like what was essentially happening today, aren't you? Even if you can check, even if we can check our S&P 500, at today's price action, look at the S&P 500, and S&P 500's movement was not that much today, right? Didn't give us that much of a move. If I can just go to the 5 minutes chart. This thing is initially just consolidating. Okay. These type of markets, guys, are the markets that you would essentially want to be avoiding. Okay. These are the markets. Yeah, it broke market structure, but after breaking market structure, what did it do? It literally just consolidated. And this is your typical 2022 model. Broke market structure at specific times, but then consolidated. So these are things that you need to know, and you need to understand how these markets basically interconnect, so that you know, okay, if I'm going to be in the market and pulling the trigger today, I'm pulling a trigger on a high probability market, I'm pulling a trigger on a low probability market, so that I know, on a high probability market, maybe I risk 2%, but on a low probability market, I'll be risking 0.5%, 1%, or the best thing to do on such conditions is to actually stay out. Okay, just watch the market from the side. You're not going to die by just watching the market from the side and understanding what is happening. There's nothing better than watching the market from the side and seeing it not do what you'd like it to do, and knowing very well that if the market is not going to do what it's not going, I think it's going to do today, I'm not going to be losing any money from that. I think for me, that's a good feeling to have, because it also shows you that you are now gaining a bit of discipline. Okay, because this thing takes a lot of discipline. And I obviously know that staying out of the market is much harder than participating. So if you don't want to participate, most people basically do not want to be in the charts. But it's also important for you guys to just watch the charts, even though you will not be participating. I think tomorrow, depending on my schedule, I just want to check my schedule, we might host a live session. Okay. But then going forward, from April, May, and June, those next 3 months, I'll basically go live with you guys. Not every day, but every maybe 3 times a week minimum. Okay. Especially high probability. Even if it's not high probability, sorry, but like days where I'm expecting a bit of volatility. So if we have news drivers, obviously on bank holidays and probably on Mondays as well, I probably won't even bother myself with those live sessions. But yeah, I'll start going live almost 3, 4 times a week, just so I can trade live with you guys again, and you guys can basically see that. But tomorrow I might go live since tomorrow is close. Tomorrow I might go live, but from the 1st of April. From the 1st of April. Okay, the 1st of April, I'm probably not going to go live because this is the Easter weekend, if I'm not mistaken. I think the Easter weekend starts. No, is it not next week? When is the Easter weekend? I think can't be next week. Yeah, it's the first. This is Easter Monday, so I won't be going live on Easter Monday. There's not going to be any volatility in the market. Okay, bank holiday, so it's useless. Let me just confirm that. Um, let me confirm that. Yes, Monday the 1st is going to be an Easter. It's going to be a holiday, right? No, should be a holiday. What about the previous Friday? Bank holiday, bank holiday. Why is it that the US doesn't have it as a bank holiday? I wonder. But yeah, either way, I'm not going to go live on that day. I'll go live from Tuesday the 2nd, most probably. From then on, in the next 3 months, those are the days I'll basically be trading live with you guys every single day. Okay, every single day, just so I can show you guys how to implement these things and also show you that it's actually doable. Thus far, I think we went live 3, 4 times, and I think we had 3 successful days, which means 3 profitable days and 1 losing day. I'll start keeping track of all that. And yeah, I think that's just about it from my side. If you guys have any questions, obviously you can go ahead and ask now before we end this stream, okay? If there's nothing, then I guess I'll see you guys on the next session. But let me give you 2 minutes to see if you have any questions for me, and we'll take it from there. Okay. Since there's nothing else, then guys, I guess I'll see you guys in tomorrow's session. Chances are very high that we'll be hosting a live trading session. And again, if we host a live trading session, we're not going to be hosting this evening session. So with that being said, let's see you guys tomorrow afternoon. Sorry. Good night.